Good morning, Predicted Trades family. Hope everybody's doing well. Let's see, a little quick review. Yesterday, for prep, we talked about, can we hold this zone? We could slip down to 41.20, and it's a goal to get back to the daily mean in that 41.65.5 to the upside. We got that pop off of our key level, 41.36.5, and rode some longs up to the mean and almost to 41.65, but ultimately we hit this 1 hour squeeze. You might notice my squeezes look a little different today. I dulled them a little, which is not hard to do. You can come in here and change those colors, right? And I basically just kind of made it a slightly darker gray, so it's not so imposing on price action. So yeah, we ran into that 1 hour squeeze, that daily mean rejected, and then we just came back to settle in our zone. You can see we barely slipped outside the shaded region of my zone, but we went from squeeze top to squeeze bottom and then just consolidated. Overnight, we did drift down and set some new lows, but we did not even get to my next key zone at 41.08, 41.01, and now we're ramping right back up above 41.36.5. So now we're dealing with a slight gap up, but we do have economic data coming out today, so let's take a quick look at that calendar. At 8:30, we have some durable goods and core capital equipment orders. And 10 a.m., some pending home sales. Should this have a huge impact today? Probably not. And then tomorrow we have initial jobless claims like we do every Thursday. And we have some GDP numbers coming out tomorrow. And domestic income. And then on Friday, we have some PCE data. We have Powell speaking at Jackson Hole at 10 a.m. And we have University of Michigan at 10 a.m. as well, with consumer sentiment index and 5-year inflation numbers. So we do have some economic data coming out over the next couple of days. As we had preps this week, so far we've talked about a couple of scenarios. Scenario 1 was coming down to this 41.36.5, settling, and then taking back off through the daily 21, back to the daily 8, daily 15, which now overlap some key levels up above. I think scenario 1 can still happen, especially with this ramp we're seeing pre-market. But we still have our levels to deal with that we did reject yesterday. We still have these squeeze clouds. So scenario 1 was coming down to this level and then taking back off. Scenario 2 is coming down and just consolidating and chopping in this range all week. And scenario 3 was coming down, getting under 41.36.5 and rejecting, getting under 41.20 and rejecting, and then taking out 4100 to start another leg down. If we start to give out that 4100, we do have that daily 50 sitting down, getting closer and closer to 4,000. So if we do get scenario 3 and we start to make another leg lower, we know what the target is to get back to. But 41.36.5 is a very big key level. If you go back and look at what we've done so far this year. Come on, don't take forever to load. There we go. 41.36.5 is right here at this. Let me back up a little. Sorry. Come on. All right, let's just look at this here. 4136.5 is this zone. You can see me highlighting. You can see that our January, February sell-off stopped at that 4136.5. That was pretty much low of year. We did print a hair below that, but that zone is what allowed us to have a little rally in March to set our second high that creates this trend line, right? We held that 4136.5 back here. After that next sell-off, we even tried to hold it once, twice, 3 times. Then it finally gave out. It became resistance, but now we're back above it. So it needs to become support. And yeah, we've slipped below it a little, right? That can happen around key levels. But ultimately, we keep fighting above it and trying to turn it into support, like we are doing pre-market. Just to give you some context of why this zone is so important. In this rally up that we've had, we got very close to testing that trend line from those highs of year, from January and March highs, but we didn't quite tap it. So now we're going to come back and find support at this level for the potential scenario of taking off again to test that trend line. One thing that we always kind of review, and I wanted to highlight today, is, I like to track moving averages, right? And especially our 4-hour moving averages. Our sell-off from Friday sent us below those and flipped them. And now we are below. You can see yesterday we tested the 8 MA on the 4-hour and pushed back down. Now we are at that 8 MA on the 4-hour pre-market. If we start to get above it and get near yesterday's high, we will likely get to that 4-hour 21, which sits around 4170. And another thing I wanted to highlight is stepping down and checking other MAs. I'd say a key one that I noticed yesterday was the 1-hour. I'll wait for that to load. On the 1-hour, we did fight slightly above the 21, but then it provided resistance every time we got to it. Now pre-market, we are getting above that 1-hour 21 and that 1-hour 8, and now they both come are crossing right over this 4132. You can see we tried to hold this 4132 yesterday. It kept, we slipped it a little, but we kept holding it. And now we're right back above it. So 4132 going to be very key if we have a little dip today. Also definitely keep an eye on these pre-market lows, because we can, looking at our scenarios, we can run into these MAs. 4146 is the 1-hour 45. We can reject and we can go lower. That's that scenario 3, right? So we're always going to keep those 3 scenarios in our mind as we look at our trade thesis throughout the day. If we step down just a little, so we saw that those 1-hours, the 1-hour 8 and 21 starting to cross as we get above them. Now that we are above them, we want to see them become support. If we start to look at a 30-minute, there we go. If we start to look at a 30-minute, we are already above the 45, and they're starting to all cross at that 4132. I just point all this out to kind of give confluence to why 4132 will be important today, as well as some of these pre-market lows, because we'll be coming to test these MAs that we're starting to break above that should become support and start sending us for a change of trend if that's what we're going to get today, right? We are in a steady downtrend. This is what it will look like to start changing into an uptrend. We need the MAs on multiple time frames to start flipping and becoming support and pushing us higher. So for today, we are coming up to this 30-minute squeeze top. Sorry, hourly squeeze top. We have a 2-hour squeeze right above that. That spans from the mean up to that 41.65. So we could, since we're running into that 1-hour pre-market, have a little dip to fill this gap. Try and hold that 32. And maybe down to that 41.25 for a bounce. Let's go ahead and just throw on our beast tool as well. We'll go ahead and talk to that. Come on. Come on, toss. And this is why we might be moving to pre-recorded preps. Because I can cut out all this silly time. Alright, in a second, all the studies will drop in. So ultimately, let's see today if we can hold the bottom of this zone. 41.30. Start to take back off. Here we go. We are arriving at the squeeze top and our burger tops. So if we do have a little pullback, want to see this open level hold at the very worst burger bottom. Talking about if we're going to have upside plays and if we're going to have a little dip to fill the gap. These are the levels I want to see hold and then start to push through the squeeze tops. Yesterday's open around 41.47. Getting back to the mean at the top of the squeeze. And if we can keep trucking and take out 41.65 and a half, we've got our next zone above with the daily 8 and past that the daily 15. But if we are going to reject and start to head lower and start to reject all those MAs and get them to flip back bearish, we're likely going to fall down, start to take out this burger bottom around 41.20, which kind of was where we had our pre-market lows from yesterday. If we start to take out 41.20, likely coming down to hit this next zone at 41.01, 41.08. Below that, we have 40.87 right in the middle of our outer shaded region. And then a couple of key levels below that. 40.56 became the new low of year after 41.36 broke. So those are some targets to the downside. I'll go ahead and take off the beast tool. So we have our range from yesterday. If we are going to consolidate today, it will likely be in the same range. Something to keep an eye on. But if we can get going, take out yesterday's high, we will be back above the mean. I'm sure as we get through the mean, we'll probably hit 41.65, come back to test the mean. We need it to hold. Just like yesterday when we were trying to get to 41.65, we came back to test the mean and it did not hold. It gave out pretty quickly. We fought back to try to get above it and rejected it. This is what gave us confluence to start shorting back, right? So, let's see today if we can hold the bottom of the zone where VWAP is, keep pushing through these squeeze tops, get above the daily 21, take out 41.65, and at least get to our next zone at 41.83, 41.90. In Q. Oh, please don't take forever and a day. There we go. So in Q right now, or the last couple of days, I've been struggling to get above 13,000 and hold. We are approaching it pre-market. We do have some squeezes in place, and 13,000 sits in the top of those squeezes. So, all depends. Yesterday we moved very quickly, the first two 30-minute candles straight up to our high of day. So we have to be cognizant of that today with our squeezes in place. We could make a quick run up to 13,000 and then start to have pullbacks, which we'll need to gauge for support for continuation. But if we can take out 13,000, get above it, turn it into support, we'll start to fire these squeezes to the upside, get back to the daily 21 and the daily 8, which now sits up at our key zone above. It is Wednesday. We know how they love to have those Wednesday reversals. But I'm not only going to be leaning to the upside, right? If we can't get through 13,000, if these squeeze tops contain us, I will be looking to short back into our range because we like to teach play that range until the range breaks. So I'll be going long up to the squeeze tops. I'll be locking profit there. I might even be loading puts. But let's see if we can take out 13,000 and keep trucking to our targets above. If we reject 13,000 and start to roll back, definitely want to see 12,900 hold. If we start to lose that, we're going to squeeze bottoms and to test these overnight lows that we've had. Ooh, kind of worth noting, on NQ at least, last night's low slightly higher than the previous day's low. That's why I'm, at least preparing you guys for the potential scoop back up to make a U. But if we start to take out 900, we're coming to the squeeze bottom, where that first Keltner down sits at 800. And should we start to take that out, the next Keltner sits down at 530 as a target to the downside. Ready. The ready was very strong in the morning and even started to get outside of those squeeze tops, but you can see it stopped at the previous day's little pre-market high. So probably a level worth marking. That 1940 is kind of the resistance right now if we do start to break out to the upside. So we're ready. Already getting to the daily 21. Let's see if we quickly start pushing into these squeeze tops. If we can take out that 41, then it's up to the daily 8 and 15 up at 1960. We also have that first Keltner there. So from 60 to 65, setting a nice target to the upside. But we'd have to get through the 41 and the daily 8. If we reject these squeeze tops and start to come back to fill gap, looking for these lows from yesterday's cash session to hold us at around 1915. If those start to give out, then we'll be coming to test these lows from overnight and that big key level of 1900. Should we start to lose 1900, that next Keltner is at 88. YM. YM, yesterday that 900 tried its best to provide support. We did slip it a little bit, but every time we got right back above it. Basically closed right at it. Now we're back above it. YM has been kind of the weaker of the indices, setting a new low compared to yesterday versus NQ, which is setting a higher low. So, like we always talk about, NQ is going to lead to the upside, lead to the downside. Well, it's trying to lead to the upside, so we need YM to play ball. Ultimately, I would love to see YM hold above this 900, push back above 33,000 through the daily 21. I got to keep an eye on yesterday's highs because we'll have to take those out. Basically, this 130, 33,130. And if we can take that out, then we'll get back to that daily 8 and 15 above. But if we keep losing 900 and start to take out 800, kind of those pre-market or overnight lows, then we can get down to this next Keltner at 600. Apple. Apple's really trying to put in a floor here. Yesterday's low, Monday's low, provided a lot of support every time Apple got down near it. Like 1, 2, 3 times, even late day, got down near it and closed above it. And looking nice and strong this morning. So let's see if Apple wants to, again, lead to the upside. This little wick here does give me some cause for concern because we could hit these squeeze tops and come back to test it. We have talked about breaking back out or breaking lower. We could have another consolidation day. But either way, let's see. Apple is already kind of close. Kind of close to yesterday's highs. If we can take out yesterday's highs around 168.75, we've got the daily 15 and 8 just above and right near that key 170. If we can take out 170 and hold it on pullbacks, then we're trying to get back to this key zone above 172, 171. If we start to break down and lose those lows, we've got the daily 21 just below at 165. That's also where POC used to be this month, but POC still sits up above at 173, just above our zone. So at least on a lot of these names, we do have POC still sitting above where we might try to get back to. AMD still has POC above at 100, way on up here. Not a lot of interest in this one or in chips. They did look decently strong yesterday in the morning, but then they just gave it all back, right? So not a ton of interest here. I want to see it settle above 93 and then maybe play it long back to the 95, 96 at least, which gets us back to Friday. So at least it would look to me like to get back to POC would be kind of a 2-day journey with the first goal of getting back to the 21 and 8, which are basically flanking 96 key level above. To the downside, if we give out 91.91, coming down to 90.80, and this 89 down below. But we have our range and our squeezes. Let's see if we can get out or if we have another day being stuck in those squeezes, right? Amazon. Amazon, was kind of just sideways yesterday. It wasn't the strongest because you can see these candles are mostly wicks, right? Not really bodies that pushed up and closed, more like they pushed up and then got stuffed down and very tight. But you can see we're holding this range from 133 basically to 135. So if we can get going, start to take out 135, yesterday's highs, where the daily 21 is going to be falling today. We've got squeeze tops there that could hold us back. But if we can get above that 135, that daily 21, turn it into support, then it's a push to get back to that daily 8 above at, 138. We have POC still up above at 142, right back in the middle of all this consolidation. So let's see if we can find our feet, start to take back off, and if the market starts to move back up as well. If we start to lose 133 that we've been holding, 132.5, that's kind of your zone of support, then we're likely coming back to 131 where that first Keltner down sits. And the daily 50s, yeah, pretty far down below, another 10 points. So. Oh, we got that. Yeah, hold on. Sorry. Massive gap to fill on Amazon to the downside. The gap is over here. I just need to extend it. And yes, it is that earnings gap. Boom, there we go. Thank you, Richie. Great for pointing that out. We are settling at the top of this earnings gap. So they're trying to defend it. Let's see if we can take off from that to the upside. But if market starts to roll over, just like we talked about on ES, the downside target is getting back to the daily 21. If we start, the daily 50, which was down below at 4,000. If we start making another leg lower, we kind of have the same here on Amazon. That daily 50 sits down at the bottom of this gap fill and right down at that third Keltner to the downside. So if we are going to see another crazy leg down, the goal for the market would be to get back to the daily 50. The goal for Amazon would be the same, which would fill that earnings gap. So kind of at a decision point here for the market for Amazon. Can we hold and start to go back up to test these moving averages, the daily 200 again? We did reset from that third Keltner back to the mean, so we can try to go again. But yeah, keep an eye on that gap fill. Let's see if it can keep providing support and get us to take back off, or if we're going to have to do another leg down. BA. BA was decently strong in the morning yesterday, and then stayed up above where it opened. So a little relative strength here in BA, which is good for upside in the market. We need BA to get back to this zone above the daily 21, daily 8. So those are the targets if we can take out yesterday's high. If we reject these squeeze tops and come back, looking for 159 to hold. If we start to lose that and these squeeze bottoms, we've got kind of low of week at that first Keltner. And then below that, we have a daily squeeze at 155. Ooh, cat. The strong one yesterday that just took off and stayed up. Yesterday for prep, we talked about we made it back to the 21. We could see a nice bounce, and boy, did cat deliver from the 21 straight up through our key level and closing up from the 21 to first Keltner and then holding. So for cat today, let's see if it can hold that first Keltner at 196. Keep on trucking up through yesterday's high and last week's high to get to 200, big psych level. We do have now within reach, and within reach I mean within that third Keltner, we have that daily 200 up at 204. So definitely keep cat on your radar, relative strength to the upside. So if the market is going to keep trucking to the upside, we want to focus on the things that have relative strength, not the things that are just sitting while the market moves up. Google looking a little weaker. Gap being down just a little, just a few cents. But it's at the daily 50. It's already made that journey from rejecting the 21 to the daily 50, like we talked about for the market. So let's see if Google can continue to find a floor at this daily 50 at about 114. Start to push back up to yesterday's highs around 115. And if we can start pushing through these squeezes, 116, 117, and 117 is where the daily 21 and 8 sit for targets to the upside. To the downside, I don't really enjoy shorting Google, but to the downside, if we start to give out 113, likely coming down to 111, where that next Keltner sits. Our economic data just dropped. And we're having a little pullback. And now all of our MAs are going to be crossing right around 4132 and 4130. Yeah, I like it. For GS, definitely was part of the downside yesterday, but just getting back to the daily 21. So not aggressively, downside. More so, most names had made it to their 21, and so GS completed the journey. Let's see if that 21 is the target it wanted to get to before taking back off to the upside. Looking for that 21 to hold from 339 to 340 as support. Start to send GS back up through that daily 200. We're stuck in all these moving averages. We made it to the 21, so now let's see if that can be support to start pushing us back up through the 215 and the 8 above. If we start to give out the 21, next Keltner is 332. JPM. JPM weaker than GS, right? Already gave out the 21, made it down to the 50. Let's see if the 50 and this first Keltner can provide support to send it back to the mean above. If that 115 starts to give out, next Keltner down at 112.5. Meta, ugh. Man, they love Meta, don't they? almost to the second Keltner while most names are trying to hold their mean. So not a real interest in this one. Relative weakness compared to everything. So if we're going for upside, not going to be playing Meta. And very clearly, we are underneath a trend line. I'd say the one saving grace for Meta is it could take out this trend line pretty quickly this morning, which would be good for the market, with the upside goal of getting back to yesterday's high at least. But frankly, I just want it to get through. I'm not going to trade it. I'll be trading other things. Microsoft definitely got beat up more than I would have expected. Gave out that 280, trying to settle at this 275 and first Keltner. So again, let's see if we can hold 275, start to take off, and take out these highs from yesterday in a bid to get back to 280 and that daily 21, which is going to be pretty much right there. If we can get above 280 and start to take off from that, next stop is that daily 8, 285, and the 15, which are making a zone above as well. But if we do another leg down in the market, this will probably go from 275 straight to 270 if we're selling off. Netflix, let's see. Just a little below the 21. Definitely trying to put in a floor around this 224 and a half, 225. So let's see if that can continue to hold. We've got pre-market low there at 224. And You could easily draw another little trend line here. If we can break through this trend line to the upside, then it's a goal to get back to that 21 at 230 and to test this trend line from where we started to sell off last week. If we start to lose 224, next Keltner at 221. Yeah. And then 215 would be kind of the next stop. NVIDIA. Made it back to the daily 50 and nice strong bounce, and then held up decent yesterday. So compared to AMD, which came all the way back at the end of the day, a little bit of relative strength here in NVIDIA. But she does have all those catalysts of already released earnings. It was negative, poor guidance. They do still kind of report today after the bell. So we'll see what we get there. Netflix is already announcing when the next earnings is. Sorry, did not mean to. Now we're loading quick. So on NVIDIA, we got our squeezes in place. Play the range till it breaks. Let's see if 170 can hold. If we have a dip. And that daily 50 at 169.5, let's call it. If we can start to get through 173, yesterday's high, squeeze tops. The goal is to get to the daily 8 and 21, which are up above and kind of right on top of each other / crossing. Right around 178, this wick from Monday pre-market. And to the downside, we have a daily squeeze down at 166 if we start to lose 170. QQQ. Today, let's see if 113.5, 113 can hold. It did provide support Friday, Monday, and pre-market here today. I'm sorry, Monday, Tuesday, and today. So 113, 113.5. Let's see if that zone can hold. If we have a little dip. If we can start to take out 315.5, then we can likely get up to this zone up above where these squeezes sit. The daily 21 likely going to be right on top of this 317.75. Let's see, I'll likely be watching these 316s, 318s today. And to the downside, I'll be watching the 310s, 312s, most likely. If we take out that 313, likely coming to this 311.8. And if we start to fire squeezes to the downside, the next Keltner is down at 305. Roku is like Meta to me. No real interest. But you can draw a trend line that we could be breaking through. Things down at second Keltner and the bottom of a daily squeeze. It's going to need the market to head up for it to make any moves to the upside, so it's definitely not going to be leading. So I'm just going to move on. And Shop, frankly, it's going to look the same. I feel like yesterday when we looked at it, yeah, no interest. Look at this. If you want to be stuck in a 50-cent range, go ahead, but I'm not touching it. Draw your trend lines, wait for it to break out. It's going to need the market to move. It's just like Roku, it's at the bottom of a daily squeeze. I don't know how anyone's having fun trading that name. Snow reports earnings after the bell today. They made it back to the daily 50 and relative strength yesterday. I think I even talked about this in prep yesterday. It was giving pre-market prints near the previous day's highs. So Snow did provide a great long back to that daily 21. Definitely pays to listen to prep. With earnings today, I probably won't play it, but we'll see. We'll see how the earnings go. It's got the squeezes in place, pinned between the 21 and the 50. We'll see how that earnings reaction goes. SPX. Let's see. Our gap is evaporating. So going to be opening close to where we closed. If we do take a dip, looking for 41.18 to hold, we start to lose that, then we're talking about a couple of gap fills to the downside, which can get us back to 40.75 to fill those gaps. They start around 41.10. So looking for that 41.18 to hold. And, looking to get back to the daily 21. We hit that yesterday and rejected. So just like ES, looking to get back to that daily 21. And then try to fight back up to 41.80. We do have a previous gap fill here, and technically another gap that I should be marking. So as we find ourselves many times on SPX, we are stuck between gaps. So if we start to break out of these squeezes to the downside, we've got gap fills below. If we start to break out of squeezes to the upside, gap fills above to get back to. And where the daily 8 and 15 sit. SPY. Yeah, on Q's and SPY, POC's still sitting way up above, back in all this consolidation. It's a good sign. On SPY, this 413.9, very key. We broke above it a little yesterday, but look at where all those candles closed. They wanted to keep it below that. So let's see today if it continues to provide resistance. If we can get above 413.9, 414, little 10-cent zone, we can get above it and turn it into support. Take off. The next goal is to get to this zone above, where the daily 8 will likely be stepping down to today, right around 418. If we start to reject and roll back over, we've got a zone here right at around 410. And if that can't hold, then we can start to slip back to that 405, right? Which is like ES slipping down to that 40.56 and SPX slipping down and taking out those gap fills below. I'm just going to skip Square, get to Tesla and VIX so we can wrap this up, and I can get the Beast tools out for the day. Tesla's got the split coming tomorrow, right? It's just the 25th is the split, which is tomorrow. So after close tomorrow, Tesla's going to split 3-1. And all of our big mega large caps have come down to penny stock price, right? As we like to joke. On Tesla, definitely draw your trend line from lows if the market does have a little dip. We'd want to see it hold those. Yeah, I'll just go ahead and mark kind of how I would do the trend line. Yeah, I'd say you could have an aggressive, an aggressive trend line like that, and you could have a less aggressive one if, don't freeze on me. Anyway, Tesla, nice little gap up through yesterday's highs on that pre-market high and almost back to the daily 21. This has been a great trade so far this week. held the 865. That's where we were loading those 950s from a $1.50 to 230. And yesterday they got up near $4, I believe, maybe 450 at the highs. Definitely looks like it wants to keep trucking. Has that catalyst with the split. If we can take out 900, where that daily 200 has now come to catch up. 910, 918, the levels to watch past that. And if she really gets going today and tomorrow, 930, 944, 960, where it looks like the top of a daily squeeze has started to set in. Oh yeah, and the key level there, 965. So, I'm definitely going to be keeping an eye on Tesla. And if she can catch a little dip, let's see what the market gives us. VIX. So VIX yesterday talked about it holding this 23.3 and going up to 24.5. Didn't quite get to that 24.5, but did peak above 24. We tagged that 24.5 and all of these daily 200, daily 50 pre-market. Now we're pulling back. So if we're going to get some good upside in the market today and start to move out of these squeezes, we need to see VIX give out this daily Keltner around 23.8, get back below 23.5, below this 23.3, where the bottom of the squeeze sits, and then to really break out past the squeeze tops, I have to take out yesterday's low and start coming back to 22.5, where this gap starts. VIX does have a gap from about 20.5 up to 22.5, so a big 2-point gap. So if we're going to see upside in the market today, we need to see VIX come down to start to test that gap. If we are going to have a dip, probably going to see VIX come up to test 24, yesterday's high, around 24.25, maybe even as high as 24.5 to hit the squeeze top. And if we're going to start to break out of our squeezes to the downside, we'll likely see VIX get through 24.5, north of 25, that next Keltner at 25.5. Hopefully this is helpful for everybody. Thank you for tuning in today. Good luck in the market. We will see you all in the chat, and I'm going to go drop the beast tools. Thanks again, folks.